Hey traders and investors, it's Serge Berger here. Today, let's have a look at the S&P 500. Things are getting a little bit choppier. Getting a lot of questions over the past couple of days on the S&P. Where I would specifically, the question I keep seeing is, where would I be calling a trend reversal? In other words, where would I be calling a top or a sort of medium-term top in the S&P at what level? My simple answer is it's not that simple because running a single factor model, in other words, just literally just looking at the S&P 500 and laying out one support line or resistance line isn't exactly something that should give us a high probability reason to call a market top. So what we need to do is look at a few things, but first let's start with the S&P to give us an idea of what's happening. We just this week so far we're seeing a little bit of more choppiness intraday, at least in terms of like putting pressure against support. Support remains somewhere between 1890 and 1885. We keep sort of bouncing off of those levels, and so until that sort of area is broken, I would call this rally intact. So that's certainly sort of the levels to look for. I would also get people over to look at the Russell 2000, which remains sort of underperforming on a year-to-date basis versus the S&P small caps. So if this lower high here in early September sticks, then it's a pretty good chance that the S&P too should at some point falter lower. So watch the Russell 2000 versus the S&P 500. Also, very importantly, you want to look at the semiconductors, SOX. I think if you don't look at the SOX, there's a good chance of potentially going short when you shouldn't go short. As long as the semiconductors continue to rise, it's probably not the smartest idea to go short the broader market. And the same thing goes for the banks, and particularly for the banks. Look at the BKX bank index. It's bullish until it reverses lower. Okay, but at this point, what this index will need is a major bearish reversal because it's been developing a series of higher lows, all pushing against this diagonal resistance line dating back to March. The chances are that this thing actually resolves to the upside before it goes lower. So, as long as the banks, semiconductors hold up, it's very difficult to call the S&P reversing. Assuming the banks start faltering, the semiconductors start faltering, the Russell 2000 starts going down, and then the S&P 500 closes, I'm going to call below 1890 or so. I'm sorry, 1980. Sorry, 1980 or so. So just a little bit below the support area that I just mapped out. Then I think we can probably call this a pretty safe medium-term top, where I would expect at least the 1900 area to be revisited on the short side. So don't use just a single factor model. Just look at the S&P, or just look at, even worse, or just looking at the Dow. Keep an eye on across the stock market, and even in a sort of multi-asset class model is probably even a little bit better. So maybe have a look at bonds and see what they're doing as well, which is probably pretty key to watch. Hope this makes sense, guys. If you've got any questions, please let me know. If you've got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader.